Good morning, all. Ira Epstein with your morning flash update, and we are now on Thursday, and this is the 6th of February, 2020, about 9:12 a.m. Central Time. And as you can see in the marketplace, another day, another set of records in many of the stock indices. Metals try to rally, giving back a bit of it, about $5 off the high here in the gold market, silver off a little bit. But the copper, I call it Dr. Copper, and so does the rest of the industry. And it's acting better and better. So I know I've been warning traders, this might be a market the short side has to stay away from. You've built in a big part of the coronavirus. Maybe it all got cooked in as this market was under the 250 level, and it's come back rather smartly. The dollar continues to gain as Europe and other parts of the world are still feeling impact of the coronavirus. I just read that Fiat in Europe is saying that they may have to shut down auto manufacturing if the situation out of Wuhan doesn't improve soon, as their supply chains are being shut down and they'll be out of some key parts. In the other markets of the grains, you saw today that China cut tariffs on about $75 billion worth of imports. The message to the U.S., they want the U.S. to understand it's business as usual. So they're going to make a cut, but it also might be that they need a bit of a delay before they're going to buy a lot of things. Makes sense. I mean, they got their hands full. And if you read the agreement, I'll tell you to go back and read it. This is a natural disaster, not something that they concocted, and there's probably going to be a give and take on that. But the fact that you're doing that, it's the oil, the soybean market, and the meats that it looks like that 75 billion impacts. They didn't remove them. They're lowering the tariffs. I think on oil it was almost a 50% reduction, and the others, a percentage of what they had there. On the energy markets, not having an awful lot of an impact on this. The oil markets tried the upside. They've given up $1.50 in the crude. They've given up quite a bit in the Brent, as you can see. OPEC is still dealing today with talking about a 600,000 barrel a day cut. So the death toll. Last night, the toll was 563, mainland cases just shy of 30,000, with 3,859 of those severe. The markets think that's dramatically understated. Now what they're doing in China, they're opening up new testing facilities, and they're going to be able to do thousands of cases at a time now. And what the fear has been is with those pop-up hospitals and others, people would come in and they look at them and they go, "Nah, you're fine," but then they'd go home and catch the disease. Now they got the test kits. As I said, they're going to lower tariffs. OPEC's Joint Committee made a recommendation. Doesn't mean OPEC's cutting yet. The recommendation is for a 600,000 barrel a day cut. OPEC could meet as early as next week to decide on this. Remember, if the coronavirus went in any manner away, you don't need to do this. This might be an overkill, and you got to keep in the back of your mind it takes 4 to 5 weeks for a tanker going out of the Strait of Hormuz to get to China. Energy markets today expect the EIA natural gas storage down 130 billion cubic feet in the current period. That compares to 228. We know it's been milder through the U.S., although I had to get up this morning at 4:30 and be shoveling outside. Chicago has a part that if you get a certain amount of snow and you don't get to it within the day, you get up to a $500 fine. So if you own a home, you've got to get that done in the city. Weekly U.S. jobless claims, this is a good number, down 15,000. And the continuing claims, well, that can go up and down. You always get that wandering there, but I always watch that weekly. Preliminary productivity and unit costs came out today, up 1.4%. The market expected higher numbers, so that's not a terrible thing. So your costs aren't increasing as much. Challenger, though, I'm a little concerned with this. They're looking for job cuts at 101% increase coming up from where they were. I think they were at a 26% decline. So they see something going on that might create more of a problem. And as you can see in just the minutes that we were just here, as the markets were up in the Dow, now they're back down. It's going to be wild, and you should expect that. The president today will be taking his victory lap about the impeachment. We'll all be watching that on TV soon. So there's a lot there. Want to remind you, I talk about during the day, especially the end of the day videos. my charting techniques. Well, you know, I do have a charting course, and it's really simple. It's all based on videos. You get to see, and I think it's about 60 hours, 60 hours of videos. See what I do, you do the same thing. It's 5-step method. Each step builds on the next. Slow stochastics, you're going to go to moving averages, into the Bollinger Band concepts. Another tool are window envelopes, which are support and resistance points in a market. Then you're going to learn how to tie them together. In the morning, I put out a subscriber video, which I know many of you know about. And one of the things I do is I put out the daily numbers for you to use for your window envelopes. People have trouble figuring out where those are. I put them out. I'm even going to do that soon for my Spider ETF video. The course videos, they're meant for you to go back and forward on. The typical time it takes one of our customers to go through the course, about 2 weeks. You get the charting software, you're going to get my backup. I'll make certain that if you're not a subscriber to my research, you get that research during the course time. We're putting into it that you get a couple of weeks of the Spider ETF. All you need to do to find out about it, go to our website. Under the word education, explains the whole thing there. You can always call my staff. You will find it's very, very inexpensive. I'm Ira Epstein. You have yourself a great day, and I'll see you this afternoon in our end of the day videos.